Hi and welcome to How to Invest in Property in 3 Simple Steps. In this video, we're going to show you how you invest in property, what are the 3 steps you need to take to become a successful property investor, and what are the 3 most common mistakes most new investors make, and how to avoid them. So welcome, my name is Daniel Wood. I'm one of the founders of Momentum Property Education. I am a property investor, I'm a mentor, I'm an entrepreneur, and a public speaker. So I'm very happy to have you here, because in this video, you're gonna get the tools to start you on your property journey. We're gonna show you how you can go from wherever you are today to become a successful investor. So stay tuned for this entire video. It's very exciting, and at the end, I have a very cool surprise for you. If you wanna start building your property portfolio, if you wanna take that step to create passive income and have that income come in for your life so that you may live that dream life that you deserve, well, at the end, I have a very cool surprise that will help you do just that. So again, welcome to this video. And before we get into the specifics about property investing, I want to address a very important question. And that's really, why should you invest at all? What is the point of investing? And there are 3 things that have happened to me in my life that have really shown me why this is so very, very important. The first is why I started doing this at all. I have 3 small kids with my wife, Gisela, and when we had our oldest now, so our first son, William, we would, as most parents know, you would take the stroller, you take a walk to get him to fall asleep. And we lived in a very nice area with like daycares kind of all over the place. So as we walked, we'd always walk by this one daycare. And when we walked by, our first walk was usually at about 7 a.m. So we'd walk by the daycare and we would look in and we'd see all these kids already there early in the morning playing. And, as parents, you're like, oh, that's sweet. And we kept on walking. But we did this for days. And, we took walks during the day. Usually we would take a walk at right around 6 p.m. in the evening. And we would go by that exact same daycare. And we started realizing a trend over a few days where we would see the same kids were there at 7 a.m. and at 6 p.m., meaning they'd been there all day. And we realized, because we had both full-time jobs and we were working very hard, that was probably the future of our son. He would be at school, from 7 a.m. to 6 p.m., for 11 hours a day. And we did the math and we realized that meant that my son, William, would be spending more time with his kindergarten teachers than he would be spending with us as his parents. And that was just one of those whoa moments, those light bulb moments when we realized, wow, this is not the life we want to live. This is not how we want it. But we had no idea what to do. But that was that big reason we need to do something different. We can't just go in the rat race until we're 65 because I'll miss my kid's childhood, his development, and being a true part of his life. So that was our first kind of realization that really got us going. The second, and it's actually very interesting, is obviously the whole corona pandemic has been a humanitarian disaster. And what it's done for a lot of people is they've lost their jobs. And a lot of those people, they have what was considered safe, stable jobs. You wouldn't have any risk. You have your income. You can work till you're 65, no problem. And all of a sudden, this corona pandemic has thrown all that out the window, and people are becoming unemployed that shouldn't have become unemployed. And that is a very interesting kind of paradigm shift, as Stephen Covey would say. It's a paradigm shift in that we thought by getting a good education, going out and getting a job, you would be safe. But it turns out that things happen that are completely out of your control, not your fault whatsoever, and they can completely upend your well-laid plans. And that is where the regular system isn't ready to support you. By having passive income, other income streams, and I'm going to talk more about passive income unless you've heard that term before, but if you don't have investments that can generate income for you, you're in big trouble. And that is a very frightening perspective, but it's also a huge opportunity. Because obviously you're watching this video for a reason. You're watching it because you want something different from your life. You want to make a change. And this is where it begins. This is where we're going to start making that change, and you are going to begin changing your life, shifting that focus and creating that passive income. So I'm very excited to be a part of that journey with you and hopefully be able to support you just a little bit on that journey to take that next step. The third part, and this is another part that is actually going to be affected by the coronavirus, but the retirement. When you retire, my dad, he'd worked for 40 years in a job, had a good salary, but when he retired, the day he retired, his salary dropped by 8,000 krona. I say krona because I'm in Sweden, but that's 800 euros, about 700 pounds, about $900 a month. Imagine taking that, I'm going to use euros for simplicity. Imagine losing 800 euros a month of your salary. And that's what happened when he retired, which meant he couldn't fully retire. He had to keep working a couple days a week just to make sure that his salary covered, what was his standard lifestyle. And the man worked for 40 years. He shouldn't have to do that. But that's one of the challenges we have with the retirement system. It just isn't robust enough to take care of us. And I'm sure you know this. This is why you're watching it. So for me, those are the three reasons why you need to invest. It's to get that freedom to, for me, spend time with the kids, but it could be travel, it could be spend time with family, friends, hobbies, or just, have that relaxing time, catch up on all the Netflix. But, whatever it is, you should have that freedom. The second reason is that safety and stability. Safety and stability, we've been proven, does not come from a job. It comes from having assets generating income. Those who've handled this crisis the best are those who've had investments that generate passive income and take care of them even when a salary or the government can't. And the third is for your retirement. When you retire, what will your income be? Well, your investments will generate an income whether you're working or not. That's the whole point. So that leads us to a very interesting question. Why should you invest in property? There's so much you could invest in. You could invest in stocks. You could invest in precious metals, commodities, venture capital, or property, or cryptocurrency. There's so much. But why property? Why am I so passionate about property? And I actually have 5 reasons for why. And I want to share them with you because this is an important part of this journey. And the first one of these reasons, and for me the biggest one, is that passive income. So if you haven't really heard that term before, passive income means that whether you work or not, whether you're at your office or not, you're making money. So property is a great example because you can rent out property. You can have a management agent or a letting agent, someone who runs the property for you, take care of the property, meaning they are working with the tenants. They will make sure that they pay. If they don't, they'll handle evictions and everything like that. Any issue that comes up goes to the letting agent. And your job is to just acquire the property and then sit back and get that income. And what that does to you is it gives you money in your pocket. Puts money in your pocket, which means it's not just a hypothetical figure on a screen, it's actually money in your bank account, money that you can use to fund your life, to fund that lifestyle you dream of. It gives you that freedom to work from wherever you want. You can be in the country where you're investing. I invest in the UK, but I live in Sweden. And I have a team handling my properties so that I can be here and not have to be there. And that gives me the freedom. If I want to travel, I can. I don't have to ask my employer for permission. I have that freedom. So passive income is huge for me. That is what's given me the freedom I want. The second reason is the stability of property. Property is one of the most stable types of investments that you can make. It is a great way to build wealth over time because if you look at the property market overall, yes, it occasionally has a dip. We had the 2008-2009 crash, but overall it crashes very seldom. On average, about half as often as the stock market. So the stock market will crash. Every other time it crashes, the property market crashes. So I'm not saying the property market doesn't crash, but I'm just saying it crashes a lot less often. And that is an important difference. So it has that stable, slow growth over time. And that's why it's considered probably the most stable investment you can make. And I'm sure you already know this, but just looking at the banks is a great example. The banks will be willing to loan you for buying a house, whether you have experience or not, whether you've done proper due diligence or not. They're willing to lend because kind of as they say, even a fool can make money in property. But for example, stocks, which is another amazing type of investment, you have to be a superstar to have the banks give you money, which means a fool can get money for property, a superstar can get money for stocks. That kind of puts it in perspective. Do you see what I mean? That stocks are considered more stable? Or sorry, properties are considered more stable than stocks? Yeah, see, even I make mistakes. But that allows you to have that security. And that is my third point, it's security. What's great about property, it's a tangible asset. It's there, you can touch it, you can see it, you can feel it. You own it, you can sell it, you can keep it, you can rent it. There's so much you can do. It's there for you. The fourth reason is the pure capitalistic, the returns are amazing. Generally, you'll say that the stock market has an increase in value. Your income, your profit from a stock market will be about 10% per annum. That's about what an index fund of the US stock market will give you every year, which is a great return. But if you're good at property investing, you can expect to get that in passive income, maybe even more in cash flow. That's money in your pocket. That means you still have the asset and you're making that income. Because obviously in stocks, you're going to have to sell or leverage your asset to get your 10%. In property, that's your passive income. In addition, your properties will also go up in value, which means your total return is actually higher for a good investor in a good area than the stock market. All these four reasons lead to my fifth, and that's that you build wealth over time. We call this momentum investing. Over time, you build momentum. You're getting cash flow every month that will allow you to reinvest, but also fund your lifestyle without killing the asset. And your assets are going up in value. And we're going to talk a little later about money. But in the money side, this will allow you to leverage your portfolio, which means take out loans, and I'll tell you why that can be a good thing and why it sometimes isn't. But what that will do is it will let you build out your portfolio and grow your portfolio organically over time, and that is what we call momentum investing. You just get started, and then it's like rolling a snowball down a hill. It gets bigger, it gets faster, and it rolls quicker and quicker. So that is really, really exciting, and the best medium I've seen for this is properties. So now a question we're getting a lot right now, where a lot of people are reaching out to us asking the question, but what about the coronavirus? What will this global pandemic do? Is it still a good thing to invest in property? And my take, and this is my take on this, and you know, it might be wrong, it might be right, but my take is, you know, people need somewhere to live, obviously. And when they lose their jobs, they stop paying for a lot of things. You know, they don't buy clothes as often. They might not go out with their friends as often. They might not go out to dinner or the pub or the movies. But there are two things they do pay for. They buy food at the grocery store, and they try to pay for their home. And those are the two last things they stop paying. It's their, you know, it's their house and utilities, and it's their food. Everything else can kind of be put aside to later. But so you become, when you invest in property, you become one of those necessities. You become a key part of what a person needs to survive, which means you are very safe even in bad times, whether it be a market crash. Because in a market crash, rents tend to stay the same, sometimes even go up because people lose their jobs, they can't afford to buy a home, so they rent, which creates a competition on the rental market, which actually drives up rents. So as a landlord renting out property, you can actually make more money in bad times, in a crash, in a pandemic, and other things. So it's a very safe way to invest and keep yourself stable when other people are losing their jobs. You have that to fall back on. And of course, I've seen amazing landlords give during the Corona pandemic. People gave holidays on paying rent and were very supportive because they had that ability, because they had built that buffer, because they had that income coming in. So that is one of the key parts for me of investing. And to put it in real capitalist terms, Warren Buffett always said, when other people are greedy, be fearful. When other people are fearful, be greedy. And in any crash, people are fearful, and that's when it's your opportunity to invest. You'll probably find your best investment opportunities in a crash. So that's kind of my notes on the coronavirus. We never know what's going to happen in the future, in any crash, in every situation. The only thing we know is that over the past hundreds of years, property values have stably been going up over time. Your rents come in, and it's as safe as you can be. So I highly recommend getting into the market. As Mark Twain said, the best time to invest was 20 years ago. The second best time is today. I think it was Mark Twain who said that. I know he did say, buy land, they don't make it anymore. So at least he promoted property investing. So the great words of Mark Twain. So let's start getting into the details. So what are the 3 steps to investing in property? Before that, let me just share you kind of my background. Like I mentioned, I'm from Sweden. I'm born here. I'm raised here. I live here. But I started investing in the UK, and I'll tell you that story a little later. But I started investing in property in the UK. And we started really well. We built up a £1 million portfolio in our first year, and we started with about, to put this in pound terms now because we're investing in the UK, we started with about £2,000, and we were able to turn that into a £1 million portfolio in 12 months. Of course, we had mortgages, so I wasn't, I didn't have a net worth of £1 million in 12 months. I had investors, shareholders, and everything, but I had built a total portfolio worth £1 million in a year. And actually, a lot of people were very impressed, and I got interviewed in like some online publications about that journey we'd made because, most people in the UK, they only, over their lifetime, buy maybe 1, 3, 5 properties. And here were we, an international, starting with really nothing, building up a huge portfolio. But the key word in that is an international. And the mentor we had was British. He was an amazing mentor, but there were things he did not know, how to invest in it from a distance, the project management side, the currency hedging, the stock, the company setups, and a lot of these details, tax laws and so on, that he didn't know. And a lot of that went wrong. So after that year rocket up, it all started falling apart. And it was a very crushing experience where it went so far where we went hundreds of thousands of pounds into debt. And my accountant called me and said, Daniel, I'm very sorry to tell you this, but my recommendation is it's time to file for bankruptcy, or it's time to throw in the towel. And I asked him, what does that mean? Because, I hadn't been sleeping. It was so stressful. From that high to that crushing where people were calling me asking for their money and for, pay for the bills and all these things. And we were so crushingly in debt, I did not know what to do. And my accountant just said, well, if we bankrupt the company, you can just write off all that debt. You start over and you begin again. And you can start over. And it was like someone had given me like hope. And I wanted to take it, but I started thinking, so I don't have to pay that debt. That's amazing. But who does? Because the money is lost. The money was lost, so who has to pay that debt? And I realized it was my investors. My investors would still have to pay that debt. And I kind of said, well, I can't throw them under the bus. They trusted me. They believed in me. They gave me their hard-earned money. And so, no, I'm not going to throw them under the bus. I am going to figure this out. So we're very blessed. We were introduced to some amazing, amazing people who helped us turn this around. And we started working with Kim Kiyosaki, who wrote the book Rich Dad, Poor Dad with her husband, Robert Kiyosaki. We started working with Success Resources, who introduced us to the Tony Robbins organization. And we started working with Randy Zuckerberg. And what happened was all these three, what they did, they came in and they helped us turn around our business. They helped us restructure debt. They helped us do new deals, even from our situation, do new deals that could kind of compensate for the bad ones. And we were able to turn it around. And so today I have a successful property portfolio. I never had to file for bankruptcy. We worked it out. I now own 40 flats at the time of this recording. We're quickly acquiring more, but at the time of this recording, I have 40 flats, 3 commercial units. I'm building a hotel, and I'm actually a shareholder in a huge resort that we're building in South Wales. So it's very, very exciting. the different things that are going on. And I could never have done it without the support and help. And actually, that's a big reason why we're doing this, why we founded Momentum Property Education. It's because we were helped. I would never have been here without my first mentor. Yes, things didn't go the way we planned, but I would have never started without him. I would have never been able to continue without Kim, without Randy, without Tony. And that support network is why we're where we are. And that's why we are trying to help you in the same way and give you what they gave us. So with no further ado, let's get into the 3 steps of property investing. So the first step is your ability to find, analyze, and calculate deals. And let me explain what I mean by that. Your ability to find deals is obviously key. If you don't have deals, well, then everything else is useless. You have to be able to find the deals. The second, though, is a lot of the deals you'll get them with a hypothesis. An estate agent, a sourcing agent, a letting agent, someone will come to you and say, hey, we have this deal. You're going to get to buy it at this. It is worth this. You're going to be able to rent it for this, and the refurb is going to cost you this. And you go, wow, that looks really, really good. But you have to be able to analyze deals. You have to do your due diligence to see what are the real numbers, because they're obviously selling you the deal. That doesn't mean it's true. It doesn't mean they're lying, but it might mean that they're taking kind of best case scenarios, and you want to make sure that you understand the deal. So your ability to analyze deals is key. And then you have to be able to run the numbers. You have to do your math to see what is my return. And don't worry if you don't like math, if that's not your thing. The math is very easy, and I'm also going to show you 2 deals in this video where we're going to calculate together, and I'm going to break it down slowly, step by step, so that you feel safe on it. So don't worry about that. So that's step 1. Step 2 is the project management. You have to be able to project manage deals. So have you ever done like a refurb of your home, like a home improvement, change your bathroom or kitchen? Yeah, does that tend to go according to plan and according to budget? Yeah, for most people, the answer is no, it does not. And the reason why is it's your ability to project manage, and it's having the right contracts and templates in place. So that is a very important part, because if you've done your math based on a certain set of numbers and then the project takes longer time and becomes more expensive, well, your numbers are now wrong. And you have to have that ability. You can't put it on someone else. You need to know how to build a team to project manage a deal. You don't need to be there physically every day. Again, I'm in Sweden investing in the UK, so I don't literally project manage the deal, but I have a system for project managing it. So that's very, very important. The third part, which is the fuel for this whole car, is the money. If you don't have money, how are you going to do deals? So we're going to talk about money. We're going to talk about how money works, the money mindset. So we're going to spend a lot of time in this video talking about money and how you can use money to successfully invest. All right, cool. So that sounds exciting. So the agenda we're going to follow, so what we're going to do here together is we're going to start out by talking about how to find deals. So I'm going to go through with you how to find the deals. Then we're going to jump to money, and we're going to look at money, and they're also the 3 most common mistakes that most new investors make, and they're very much related to money. So we're going to look at that together. Then we're going to calculate some deals together. We're going to calculate 2 deals together, and then I'm going to show you that surprise that I talked about before. And now I see you going like, wait a sec, you just skipped most of step 1 and you skipped step 2. So before we continue, let me give you a little bit of bad news here. I can't teach you everything it takes to become a successful property investor in this video. The reason is this forum won't allow us to teach you everything it takes. I need to show you the templates, I need to give you exercises, and there's a lot more that goes into it. And let me tell you a little story of when I was speaking at a big conference in Uppsala here in Sweden. I spoke for 3 hours on property investing, and when I was done, a man came up to me and he just went, "Daniel, I am incredibly disappointed and dissatisfied with your speech." I'm like, "Oh wow, I'm so sorry. What was wrong? What can I do better? What can I do?" He said, "Well, I listened to you for 3 whole hours and I still don't have any passive income." I know, it doesn't make sense, right? I mean, you're not going to get passive income from watching this webinar. But what and it's ridiculous that I have to say it, but the important thing is, I can give you as much information as I can, but I can't teach you everything because we need to go through a lot of things. And actually we've created a whole online course where you'll have exercises, where you'll have guides, where you'll have templates. I mean, in that course, we actually spend 2 full hours going through how to do your due diligence, how that process works. We calculate on a lot more deals. We show you how to analyze different markets. So there's a lot that goes into it, but I'll tell you more about that later if that's okay, and continue. So that's the first part. I can't teach you everything in this video. The second is, you won't get passive income from just watching this video. It will be up to you. It will be up to you to do something with it and start putting it into action. Because as one of my mentors says, action is the name of the game. Without action, there are no results. So that will be up to you to take what you learn and put it into play. So I hope you're ready, but let's start now and go through how this works, because then you will be able to begin. And I can tell you from this course, you will get everything you need to be able to go through it. So we're gonna start with this now, so you get that basis, so you get that introduction, so you know what it is you need to know. And that's the first step, is learn what you need to know, and then you go out and do it. All right, so let's look at how you find deals. In essence, there are 2 main ways to find property deals. So the first is by finding them yourself. And the second is by having what's called a sourcing agent. A sourcing agent is like an estate agent, but they work for you as an investor. Have them bring you a deal. All right, and they go through a little different way. So let me explain them, what's different, what's the same, and kind of give you a pros and cons of each here. So if you're going to find deals yourself, there are a lot of different tools at your disposal. Obviously, you can go into the regular property websites. So in the UK, it would be Rightmove or Zoopla. You go through and you try to find these diamonds in the rough. What you can also do is you talk to estate agents, you talk to letting agents. You might even be able to get to hold of banks and get repossessions. You might even, walk down streets and put out posters and flyers about that you're willing to buy properties, and that you'll complete fast and you buy cash and all these things. I've also heard of people standing literally on the steps of the court, to like the repossession court, and try to grab people on the way to repo court and say, hey, I can help you out, I can buy your property. So there's lots of ways you can do it. And really your goal, if you're going to find properties yourself, it's about volume. So what you want to do when you're looking for properties is you want to be talking to all these different people, using as many channels as you can, getting deals into your pipeline. Then the ones you think are good, you want to start negotiating. You might do a viewing and take a look, have maybe a builder if you have a relationship, get a quote, get an idea, get a feel for what you want to do with the deal, your strategy. Then you put in a bid. And your goal with the bid is for it to be low enough that the person says no. You really want to be putting low ball offers in there, because if you put in a bid and they say yes right away, that means you probably left money on the table. So you want to be putting in low bids. Obviously, it's a negotiation, it's a relationship, but really it's about volume. So, and we do separate videos completely about like the negotiation, and we'll teach you that and help you with that. You have our YouTube channel where we have lots of content like that. So if you're watching this on YouTube, just hit the subscribe button and you'll get that type of info. But what you do is you negotiate, and usually you'll walk away with a no because you're bidding so low, which is fine. That's okay. You want to build up a pipeline of about 200 deals that you've put in these lowball offers on. And then what you'll do is you'll come back every maybe 2 weeks, and you'll call them again and you'll say, hey, how's your sale going? I'm still here. I'm willing to buy at this offer. And you continue that negotiation. Over time, deals will start falling out of your pipeline one at a time, and you'll be getting really good deals. So it's a lot of work when you do it on your own, but it does allow you to get good deals. What I do is I use what's called sourcing agents. So sourcing agents are people that work and help you find deals. They are professional deal finders. They're deal sourcers. And what they do all that work day in and day out, and then they'll sell you those deals that fall out, and they'll take a little fee. What's great with sourcing agents is they have often done this for a long time. The good ones. I should say there are good ones and bad ones, all right? You want to be working with good ones, ones that have experience, that have a team, that have done a lot of deals. Because what happens is they build up relationships over time. People know that they can source deals, that they have buyers, which allows them to get even better deals. So usually the fee they charge doesn't really matter because you would be paying more if you tried to do it on your own than you will be paying through them even with the fee. So they are a good sourcing agent is worth their weight in gold. And I have a couple criteria that I use. I want them to have 10 years experience at least. I want them to have a team. So I want them to have a team because the reason for it is it's very easy to go out and start sourcing deals. But if you built a team around it, you love it, you've become passionate about it, and you've done it enough that you have, that you've been able to build an organization around it. You have happy clients that are coming back. So that's a proof of success. And then you want them to have a good, strong, positive local reputation. So people think they actually are good, because that will often tell you if they're not. So if they have those three things, you can often start working with them and trust them and use their teams, because they'll often be able to have a good local team with good builders, letting agents, because that's a big part of the deal and becomes a big part of their relationships and reputation. So they'll build a quality team behind them. So these are kind of the keys for me in finding deals. So if you choose your way, I recommend using sourcing agents, and that's how we've done it. That's why we have properties all over the UK, because I'm not locked to a single area. And we'll talk more about that with areas and strategies in Freedom Property Intensive, but that it allows me to have a good mix of different properties in different areas because I'm working with quality teams in different places. It keeps me safe and secure. Of course, that was one of the mistakes I did early. One of the reasons we dropped was because I had really bad sourcing agents. So it's a part of both. So great, so that is how we find deals and that part. Let's move on to money. So I know a lot of people like money. I know it's really taboo to talk about money, but I mean, you're watching a video on property investing and creating passive income and living your dream life. So I may suspect you suspected money might come up. So let's talk about money here. So we learned a lot from working with Kim Kiyosaki. That was a key point for us. And I love the book, Rich Dad, Poor Dad. So if you haven't read the book, Rich Dad, Poor Dad, I highly recommend it. And in that, or actually in their follow-up book called Cash Flow Quadrant, they created something called the Cash Flow Quadrants. And I'm going to ask our editor to bring that up here for us. So what they did was they split people into one of 4 different quadrants based on how they make their money. And I know it's really wrong to split people in based on money, but remember, they did it, not me, so don't shoot the messenger, okay? But we use this because it gives you a lot of information here, so bear with me. So they've split you into 4 different quadrants. The first quadrant is called the E quadrant. The E quadrant stands for employee, meaning if you have a job and you're trading your time for money, you're in the E quadrant. The second quadrant is called the S quadrant. So the S quadrant means you're self-employed. You've created your own company, so you've been able to, quit working at, for someone else. You've started your own business, but it's still based on you. The next step is called business owner. And I've noticed there's a big misunderstanding among a lot of people between what business owner and self-employed. So I'm going to just give you some clarity on that so you understand what I'm talking about here. So a lot of people when they hear self-employed, they think about the type of company, self-employed company like consultant. And so they think, limited company, self-employed. And that's not what a business owner is. A business owner is not someone who's, just has a limited company. That's not what Robert and Kim meant. Others think self-employed and think self. So business owner would be I have employees, I have a team. And you're kind of on the right track, but it's not exactly what it is. So there is an easy test to compare the two. And really the way to do it is if you could leave your company for 6 months, have zero contact with the company whatsoever, and then come back 6 months later, and not only has your company survived, but it's actually grown in your absence. If you can come back and it's actually grown in your absence, that means that it isn't based on you. It doesn't need you to survive. And that's when you're a business owner. You're kind of out of the business and you have a system that works for you and creates more value. The last quadrant is the I quadrant. What do you think that could be? Exactly, investor. So that's the investor quadrant. So as an investor, that means that you can live off of your investments. So there are, all three other quadrants might have investments, but unless you can live off of them, so if you're an employee and you need your salary to survive, but you've invested some, you're still an employee until the day you can live off of your investments. So I hope that makes sense. So let me tell you a little bit about my story and kind of how I started out and give you a little more of the details for how we got to where we are today. So for me, it all began about 13 years ago. I was in the E quadrant. I was an employee. I had a good, stable job. I was an HR consultant. And one day my boss came into the office and he kind of came up to me and he said, "Daniel, I got some amazing news." I'm like, "Oh, okay, what?" He said, "We are going to a seminar with Brian Tracy." I said, "Brian who?" He said, I had never been involved in like personal development, business development. I mean, watching a video like this, that wasn't even on my radar. I didn't know you could do stuff like this. And it turned out that Brian Tracy is one of the most famous speakers in the world when it comes to leadership, sales, business, and goal setting. And he was actually here in Sweden. They rented an entire stadium and it was packed. And I learned so much. It was a full day where he taught the principles. And I learned so much. It was incredible. What really stuck with me and that I still have with me today was when he started talking about goal setting. He started talking about the importance of writing down your goals. And it really resonated with me because I used to be an athlete, maybe emphasis on used to be, but I used to be an athlete and I loved having that clear goal to aim for, but I'd never written it down. And Brian said that was the key, that was the big differentiator, was writing down your goals. And he referred to an old Harvard Business Review study, and I'm going to share it with you because it was such a powerful moment in my life. But what he explained was Harvard Business Review made a huge study, years ago, done about everyone who was beginning at Harvard University. So I hope you know Harvard, one of the most prestigious schools in the world. So what Harvard Business Review did was they asked everyone who was beginning at Harvard about their background, about who they were, and about their goals. And they found that everyone fell into one of three very clear camps when it came to goal setting. And it turned out that people react to very predictable ways around goals. And now remember, these are some of the top students in the United States. They've worked so hard to make it into Harvard. And a big part of them, so that first group, when they were asked about their goals and background, it turned out they had no goals. They'd made it into Harvard. Life is set. We don't have to think about it anymore. The second group kind of had an idea. They could kind of had an idea of where they were going, but it was off in the distance, and they couldn't see it clearly, and it was definitely not written down. And there was a third group. About 1% of the people asked had clearly written down goals with a deadline that they had shared with a friend. And when they followed up with these people after 5 years, after 10 years, after 15 years, and finally after 20 years, they asked them one simple question. They asked, how much money do you make today? And remember, this is the US. People answer when you ask that question. But it turned out that this 1%, the 1% that had clearly written down goals with a deadline that they had shared with a friend, were now making 20 times as much as the other 99% combined. So when I heard this, I ran home to my wife. I'm like, honey, we are setting our goals. Let's get started. And so we sat down at the kitchen table and we're going to write our goals. But what are we going to write? And the only thing I could think about, the only thing that kind of came to mind, retirement. And I think that came from my dad. He was 40 when I was born. So throughout when I was growing up, when he would come home from work, he would kind of walk into the hall. It's almost time for retirement. And so for me, that was this big thing is, retirement was positive. That's why I went to work. I worked for my retirement. I worked for my vacation. That was the whole point. And I know it's horrible, it's depressing, but that was my life outlook at the time. So we said, all right, retirement. And then we kind of looked at each other and we said, wow, we're really good at this goal setting thing. We're going to be able to do this because all we need to do is survive till we're 65. And we started thinking that was a long time away. And so we started thinking, okay, is there any way we could do this sooner? And now no one in my family has an investment background, no one's, run businesses, nothing like that. I had zero financial knowledge. But we thought, maybe if we could save up enough money, if we somehow saved up enough money, maybe we could retire sooner. And so we did our math and we calculated how much money we'd probably need to have to be able to retire earlier. And so we came up with a number, and we both had good jobs. We both were making money, and we realized, okay, so if we cut our expenses as much as we can, save every penny, we calculated how long time will it take before we can retire. And it turned out we would be able to retire, if we saved every single penny, we would be able to retire in right around 100 years. Yeah, so we said, all right, let's just retire at 65 then. But there's got to be some other way. There's got to be some other way. Maybe if we invest. Maybe if we invest that money and somehow that money makes money and then we're saving money and it's like a double stream, maybe we can make it happen sooner. And so we started thinking, and all right, again, we knew no one who was an investor, but we thought, how hard can it be, right? How hard can investing be? Yes, we were very naive. So we started investing, and we tried out everything we could figure out. We tried stocks, we tried bonds, we tried mutual funds, we tried options, we tried precious metals, commodities, everything we could get our hands on. And can you guess how it went? Yeah, I think you're right. We lost money on every single investment. And finally, we threw up our hands. We said, no, this obviously doesn't work. There's a reason why everyone retires at 65. We're done. And we gave up. Luckily, there was something that happened that completely changed my life and is the reason why I'm here today and why we're having this interaction. And I'm going to share with you a little later in this video what it was that happened that completely changed my life. I know I gave you a cliffhanger. I'm cruel, aren't I? But there's a reason I want to get into, because it was years later when we had started getting on this journey that we met Kim Kiyosaki. And it was really exciting how we met her, because we actually brought her to Sweden. We host an annual Empowered Women event, and we actually brought her to Sweden as the keynote in one of the years. And it was so exciting. And obviously, as the promoter of the event, the one who runs the event, you have the extra bonus to get to know the speaker. We had her out for dinner, we got to know her really well, and we built a relationship with her, and it was really, really exciting. And we told her about the start of our journey, and she kind of looked at us and like, yeah, you made the 3 major mistakes that new investors make. Let me explain to you what happened and then, what happened after. And I want to share with you these 3 mistakes, because I made all 3, and that made my journey so much more difficult. So I want to share them with you now so you can avoid them. And what she said was, well, look, you were working, if we bring the cash flow quadrant back up here, Mr. Editor, we have the left side and we have the right side. And so the left side of the quadrant, that is where we have, the employees and the self-employed. And there is one mindset to that side. On the right side of the quadrant, you have the business owners and investors, and they have a different way of thinking. And that difference was really what made the difference for us. And so what we did, and what is common for people on the left side when you're trying to make that shift over, what is very, very common is that you make these mistakes. And the first one, and this was a big one, is your mindset. And yeah, when I know a lot of people talk about mindset, but when Kim talks about mindset, she doesn't mean the same thing that a lot of people, you get excited, be hype, yeah, go. It's not that, because there are lots of excited, hype people on the left side. There's another difference, and it's really 2 things. It's how you handle setbacks, and it's how you handle your surroundings. And so we'll talk about both of these, because they're very, very important. Because when you're doing this, when you take this step, when you start investing, you're going to have setbacks. And sadly, I'll do everything I can to help you, but sadly, I can't do everything. And you will figure out, even if I teach you everything that I've done wrong, so you can avoid that, and I will, over our different courses, like in Freedom Property Intensive, but I can't help you avoid everything. You will come up with your own ways to make mistakes. And that's okay. But the way you handle it is very, very important. Because if you take action, if you do something, if you take action, there are only 2 possible outcomes. One is that you succeed, and the other is that you learn. You might have been thinking fail, but no, it's learn. You only fail when you give up. That's the thing, is either you succeed or you learn. And Darren Hardy talks about this fantastically in his book, The Compound Effect. In The Compound Effect, he talks about these two outcomes and how the best people in the world, what they'll do is they'll take action, they'll have a setback, and then they'll review it. And that was the difference. So go back to what my start investments. Why do you think I tried so many types of investments? Well, I tried stocks, right? And I failed. It didn't go well. I had a setback. But instead of learning from it and going on, I tried something new. Instead of learning when that went wrong, and I kept doing something new instead of learning from my mistakes. And so what you want to do is you want to take action. You either succeed, which is great, that's awesome, or you have a setback. And then you look at it and you ask yourself three questions. Brian Tracy taught me these three questions. The first one is, what went well? Second is, what did not? And the third, what can I do differently? What went well, what did not, and what can I do differently? And then you act again. And when you act again, this gives you a new opportunity to either succeed or learn a little bit more. And that gives you a new chance to ask the three questions, which you then act. And you just keep on going until you figure it out. Persistence is the key here. That is the key. Probably the greatest example of this is Thomas Edison. You might have heard of him, the inventor of the light bulb. And what Thomas Edison did, if you've read the book Think and Grow Rich, again, amazing book, Think and Grow Rich, highly recommended, classic, iconic book by Napoleon Hill. In it, it was written in the early 20th century, and he interviewed Thomas Edison, he interviewed Andrew Carnegie, Henry Ford, all these amazingly successful entrepreneurs, and he was told a story by Thomas Edison. So Edison told him a story of how he was inventing the light bulb. And Edison was very vocal about this project he was doing and shared the progress. And as he was on track, he had a journalist come to him and ask, Mr. Edison, sir, I understand that you're trying to invent the light bulb and you've now failed 6,000 times. Isn't it time you give up? And Edison just looked at him and said, son, you do not understand the way the world works. I have not failed a single time. I've successfully found 6,000 ways not to invent the light bulb. Think of a different way. And then he found 4,000 more before he found one that worked. And that's the key. He found one that worked. And now he is Thomas Edison, the inventor of the light bulb. The basis on what he built GE, one of the biggest companies in the world. It is based on failure. We all forget the 10,000 failures, but he had the courage to go and go and go and go and go and learn and learn and learn and learn and finally figure it out. And that is that key. If you can do that, nothing can stop you. You will succeed. The second part we have is the people around us. Because I can imagine you're watching this video, you're taking your time to learn and improve and take that step, and I applaud you for it. You are amazing. And in being such an amazing person, I could guess you always have a new great idea. You have a new plan, a new strategy, something you're going to do. What do the people around you say when you share that idea? I mean, a lot of them might be going like, well, that's never going to work, or, well, come on, even you must realize that's a bad idea. Or as my family always said to me, that's such a good idea. Why hasn't someone else thought of it first? As if I couldn't come up with a good idea. It was horrible. But that's kind of our cheerleaders when we're doing this, is they're kind of around us going like, that's not going to work. And you still have to go out and do it, knowing that you're going to have a setback. And when you have that setback, what are they going to say? Told you that wasn't going to work. And still you have to do it. And you still have to try and try and try and go and go and go and learn and learn and learn. And finally you figure it out. And then it's your turn to say, I told you so. But really though, I don't think that they're saying this won't work because they don't believe in you. The reason why they're saying it is because they don't believe in themselves. They are afraid. They know you're amazing, and I'm sure they know how great you are. But they don't see how they could do it. And then they project that onto you. And that's why they become so negative and so defensive when you talk about your exciting plans. So what I hope, and I want to ask you this favor, I mean, we've spent some time here now together, and I hope I can ask you this favor, and it's important to me because this is why I succeeded. Someone did this for me. I want you to take action, to do this, be successful, have the setbacks, learn, prove them wrong, and then, this is the favor, I want you to turn around and help someone else. And this is what, I only got here thanks to my mentors. And each and every one of them, they said the same thing. They said, of course I'll help you. I'm here for you on one condition. When you succeed, and I love them, they say when, not if. When you succeed, I expect you to turn around and help someone else. And that is what created this company. That's why we do what we do. My goal is to help 1 million people become financially free. And that's what we're working towards every single day. That's why we're doing these videos. That's why we've created our YouTube channel. That's why we have our Facebook group. That's why we're doing all these things to support you, because that is our mission, to help 1 million people become financially free and live that dream life that you deserve. That's really what it's about. It's about you living your dream life, whatever that is, 1 million people. And I can only do that with your help. So that's why I want to ask you to become successful. I want you to do that, not just for yourself, but for me as well, okay? Can you become successful for my sake? But then turn around and ask someone else, and help someone else. Support them. Show them that it's possible first by doing it yourself, and then say, I'll help you too. I'm here for you. That is how we do this. It's like a ripple effect on water. So that's what I hope. Again, though, we have another challenge in that mindset, and that is the greater, the greater kind of world. And in Sweden, we call this jantelagen. It basically means, don't think you're better than anyone else. Stay in your lane. Don't do anything different. And that can be really tough, because first off, you have the people around you saying this is not going to work. Then you have the setbacks will come, and you have to brave through them. But then you have the cultural norm of kind of staying in our lane. And to me, I obviously broke out of that and I started my journey. But when you do, you can be very, very judged. And that can be really tough, and I'm not going to sugarcoat it. It is a tough journey, and sometimes a lonely journey. That's why we've created this community. That's why for everyone who does Freedom Property Intensive, they get invited into a Facebook community for everyone who started their journey, so that you can connect, so you can bounce ideas, so you can get to know each other, and so you can grow together. So it's such a key part of this journey, to have that support group around you. And it can be lonely before you find one. So that's why we've created one to support you and help you. But what makes this exciting is that if you get through it, it can be great, but it can also be tough. I mean, I haven't had a lot of detractors. I'm very happy to say. I mean, we've helped a lot of people. So we have a lot of our students are, we have dozens and dozens of videos on our YouTube channel of students sharing their success stories. We've been written about in articles. I've been interviewed on podcasts. We've gotten a lot of positive attention. But I had one blogger write very early in our journey, write a very, very negative post about me. It was like he was doing an expose. And this was just as I was starting out. It was right after that crash that we had. And he attacked me very much personally. And it was very, very tough to go through, because at the time, I wasn't teaching property. I mean, I was doing my own journey, but we were bringing top teachers to Sweden. So we for example, we work with Tony Robbins' organization through Success Resources, and we bring his events to Sweden. We teach on his behalf. We work with Randy Zuckerberg. Obviously, we have Kim Kiyosaki here. And he attacked me very much for, having the gall to do this. And it hurt me very much emotionally, because I wear my emotions a lot on my sleeves. I hope you've kind of noticed that in this video. But it was a very painful experience when he said these things, and I mean, they weren't true. It was lies, but it still was very painful. And I kind of felt like, look, I mean, like this video, it's free. I haven't forced you to watch it. It's something we offer. If you don't, you shut it down. But you've chosen to watch it, and I'm trying to give you as much value as I can. But what happened was we basically said, look, if people don't want it, we'll stop. We shut down the company. The reason we didn't was about 100 of our other clients, they called, they texted, they emailed, and they said, hey, look, that's an idiot. Their words, not mine. Sometimes mine, but don't care about him. Keep doing what you're doing. What you're doing is amazing. Please continue. And that's why we still do what we do. And I'm so thankful for those people that saved this company. And actually afterwards, I sat down with my dad and we read the article together. And my dad's American. So as we were reading, and that's important for a reason. But as we were reading, he started smiling. And I looked at him, I'm, Dad, what are you smiling about? This is horrible. This is so awful. And he said, sue his ass. I said, yeah, you see, American, right? So I said, all right, let's sue him. And so I reached out to a solicitor here in Sweden, and I asked, can I sue him? And I put up front our case. I said, this is the truth. This is what he wrote. And he didn't reach out to us for any comments or anything. But so this is what's happened. And the solicitor just looked at it and said, yeah, this, you're going to win. This is easy. That's great. And so what's going to happen is we'll take him to court. We'll sue him for slander. And when we win, he will have to, and I'm going like millions, edit his article. I said, what? He said, I know you're part American, but no, you're not going to get millions. I'm like, all right, I get that, but at least delete the article. He said, no, because in Sweden, you have the freedom of the press, and bloggers fall into that. So he can essentially say whatever he wants about you. He does have to edit the article because he attacked you as a person. He can only attack you or company. He can say whatever he wants about the company. So what you're going to have to do, or what he would have to do, is edit his article to, instead of saying Daniel Wood is a, he has to say one of the founders is a, and then it's okay. And so obviously we dropped it. But for me, it was very painful. It was something I went through, and I was very close to closing the company. And I share this because I want you to know that this will be a tough journey. The goal is amazing. You're going to be financially free. You're going to have income. You're going to be able to pass it on to your children. You're creating a legacy here. But on the way to that point, people are going to question you. You're going to have setbacks, and you might even get attacked. And I hope you don't, but maybe you might. And I want you to prove to people that you can succeed, and then I want you to help them, okay? That is my hope for you, that you do this, and it's all about that. And that leads us actually to the second big mistake most new investors make, is they don't take action. So as my mentor says, action is the name of the game. The more action you take, the more results you get. So by taking action, you will reach your goal. And I'm not worried about you when it comes to action. I mean, you're watching this video, you had the patience to learn, but now it's important to put it into play. So I'm going to tell you a short story about one of our attendees at one of our workshops who shared with me about this whole action part. And it's very, very interesting to me because it was a very powerful story. This man is very, very successful. He is in the B quadrant, in the cash flow quadrants. He is in the B quadrant. He runs a company with over 100 employees, and he's completely out of the business. So he's very, very successful. But in one of our breaks, he came up to me and he said, Daniel, I totally get what you're talking about when it comes to action. There are 2 deals that I missed out on because I didn't take action, and I will never forgive myself. And I'm, as you probably noticed, pretty positive. I'm like, dude, you're fine. You've done really, really well. Don't beat yourself up. He's like, no, Daniel, you don't understand. Especially one of them, I will never, ever forgive myself. And I said, all right, tell me the story. I said, well, this was a few years ago. I was online in the Swedish version of like Rightmove and Zoopla, so called Hemnet. And I was surfing for just properties, just looking around. And I found this plot of land right near where I live. And it was a big plot with planning permission, already in place, planning permission to split into 2 lots and build a house on each lot. I knew, so this is him, I knew that land like that would be worth 7 million krona, so 700,000 euros with that planning permission. But it was listed at only 120,000 euros. It turned out that the reason for that was that utilities, like the council, hadn't pulled up like all the utilities to the plots, but they had guaranteed that within 5 years they would. So he knew that if he bought it now for 120, he would be able to hold it for 5 years and then sell it for 700. Amazing deal. So he called the estate agent, and he was actually able to negotiate the price down to 110. Isn't that amazing? He got the price down to 110. He said, great, we have a deal. Let me just call my bank and make sure I have a loan here, and then I'll call you back. And so the estate agent said, fine, yeah, no problem. And so he called the bank, and the bank said, yeah, of course, go for it. No problem at all. You're wealthy. You'll do this. And so he sat back, and he's like, I got this amazing deal. The money is in place. All I got to do is call the estate agent, and we'll go sign the contract. Awesome. But it was about 4:30 now, and he was going to go out fishing with his friends. So he said, you know what, I'll just call the estate agent tomorrow. We can wait till tomorrow. And he went off fishing. Yeah, I can hear you go like, oh no. Because he came back the next morning, 8 a.m., straight away called the estate agent and was like, hey, all right, no reply. So, all right, I'll call back again. Call back at 9, no reply. Call back at 10. And she answered and she said, oh, I'm so thankful for you calling. I am sorry, we signed the contracts last night. The property is sold. And he was crushed. He said, I'm never going to forgive myself for going off fishing instead of just taking the action and completing the deal. That's why it's so important. And I love Tony Robbins. He always says, when you are in the place of an opportunity, make a decision then and there. Don't go home and sleep on it. Make a decision then and there. And he has 2 reasons for saying that. I know we love going home and sleeping on it, but I'm a big fan of Tony. He saved my ass. So sorry, pardon my language, but he did. Let me share why he says that. There are 2 major reasons. One of them, it has to do with your gut instinct, your subconscious mind. I don't know if you've ever done multiple choice questionnaires. Yeah, maybe. If you have, you'll often have, when you read the question, you're like, A, it's A, I got this, A. But then you start thinking and your kind of intellectual mind starts to take over and it's like, no, I think it's B. Yeah, I think it's B. I'm shifting. I'm switching over to B. And you switch to B. I don't know the exact statistic here, so don't quote me on this, but it's around 70% of the time when you switch, you get it wrong. You were right at the onset. Meaning your subconscious, your gut instinct, your subconscious mind is actually smarter than your intellect. So when you are in the place of an opportunity and you make a decision, you're making it based on your gut instinct. Obviously, there could be fear, so you got to look past fear, but you're making it based on gut instinct. And that means you might not always get it right, but you'll get it right more often than sleeping on it and letting your intellectual mind convince you otherwise. Does that make sense? Yeah. So the second reason is that if you do go home and sleep on it, that means you're still thinking about it, right? So you're still expending energy on this decision. But when you wake up the next morning, the new day begins and lots of new decision opportunities come up. And you might start sleeping on some of them, which means all of a sudden you have a lot of things you're going and thinking about, and that accumulates. And if you're not making those decisions quickly, it keeps accumulating to the point where you have so much energy being expelled into the past that you aren't able to make quality decisions in the now. And that can be incredibly detrimental to your prosperous future and your opportunities. So that's why he says, look, even if you make the decision now and it's wrong, you can always shift back. You can always, learn from it and move on. But if you don't make a decision, you can't learn and it hurts your progress going forward. So when you're in the place of an opportunity, make a decision. It's very, very powerful. Action is the name of the game, right? So let's jump over now and talk about money, because I know you want to talk some more about money. So the way the right side of the quadrant versus the left side look at money is very differently. So if we bring back the cash flow quadrants here, let's look at this in the left side and the right side, because the way we look at money is very, very different on each side. So on the right side, what they do differently, or actually, let's start with me. Let's start with how I started out. You remember how I was trying to save to retire. So it was all about my money, my investments, my retirement. Me. On the right side, it's more about the systems. It's more about the help and the support and other people. So when you create a business on the right side, you're thinking, how do I create a system where people can work together to run this for me? On the investment side, how do I pair together money with deals in a way that allows me to just kind of be a passenger and take a cut and earn from the work of others? So it's really about that putting one and one together and getting three. And that's a very, very big difference with how you look at money. And I know this is a big shift. This is a big shift. And this is one of the things that took me a long, long time to learn. Because a lot of us, we've grown up learning, you shouldn't take loans. You shouldn't ask other people for money. You should be able to take care of yourself. And that is true in a sense. But when you're building a business, when you're building an investment company, what you want to do is you want to be able to leverage other sources of income. Robert and Kim, they call this OPM, other people's money. I don't really like that terminology because it's not just about other people. We say other sources of capital. And we've actually identified 25 other sources of capital. So you remember how I started with 2,000 euros? Well, this is how we did it. We used 25 other sources of finance in addition to the bank financing, so primary financing. For our deposit on properties, we use 25 different sources. So there's so many different ways you can do this to finance deals. And we talk about this more in our courses when we have time to go in deep into this. But to kind of give you an idea here, is there are different ways to structure a deal, allowing, for example, someone else to pay you, bring the deal, and then you split. That's called a joint venture. One person brings the money, one brings the deal, and then you share the profits. You could be the one bringing the deal, someone else brings the money and you share. And there are lots of different ways to structure this, and we'll show you how to do this legally, correctly in our courses, because obviously we want to do everything legally. But I want you to start thinking in these terms, just opening up that mindset. Obviously, if you have money already, that's fine. Then we start with your money, we build your portfolio, and it might be enough. You just use the momentum, the momentum investing model to let it build and accumulate over time, and it grows organically. If you don't have as much money, or you maybe don't have enough, or you want to grow faster, well, that is where money comes in as the catalyst. And that's where the investors and the business owners really expand and grow as they leverage these outside opportunities. So let me go back to my story. You remember, as we talked about, I had done a lot of investments. I had failed in every one, and I had given up and decided to retire. So I'm going to put you out of your misery there on the cliffhanger I gave you. I know you've been waiting so much to hear more about me, but but let me explain what it was that happened. Because after I gave up, my career continued. Life went on, and I kept on working, and years went by before someone introduced me to the book Rich Dad, Poor Dad. And again, this is why I'm so thankful for Robert and Kim especially, who's helped us personally. But I'm so thankful for them because that book started me on my journey. If all you do as an action from listening or watching this video is that you read Rich Dad, Poor Dad, I have done my job, okay? That's how good I think the book is. It really teaches the basis of how to start thinking as an investor. And that's what happened. I got the book and I couldn't put it down. I read it and it was so much brilliant information. It's really about how to think about your assets, your cash flow, and building your future. And one of the things they talk a lot about is property investing. And so as I read it, and me and my wife, we read it together, we kind of went, wow, we're going to be property investors. This is awesome. All right, let's do it. But how are we going to afford it? Where would we even start? Guess it's a pipe dream. All right, well, we'll just wait for retirement. But luckily, there came I saw online about a seminar, very similar to this webinar we're doing now, but a seminar where I could go and learn about property investing. So I signed up. It was free. So I signed us up, and we went, and it was this amazing evening with, it was a fantastic speaker, a British man who'd come to Sweden, and he shared about his journey. He'd gone from being bankrupt to being financially free, teaching all over the world about property investing. And he explained why the UK was such a brilliant market, how the government is like on our side because they have such a huge, they have such a lack of homes. They need homes desperately in the UK. And so the government supports small investors to help us get started by, the regulations, the laws. This has opened up a banking sector with thousands of different lenders where hundreds will lend to investment property. And so we're invited in to be able to get financing. There's an ecosystem that's been created as a result with letting agents, sourcing agents. The opportunity is there. And we said, all right, this is what we're going to do. And I went up to him after the presentation. And I said, wow, sir, what you've done is amazing. I would like to do that. I would like to take that journey. But you know how you have that voice in the back of your head that if it sounds too good to be true, it usually is? Well, I was kind of going, is it actually possible? Could I actually do this? And he just looked at me. He said, look, we have a workshop. It's a 3-day workshop that you can sign up for, and we'll show you how, and you'll see. So I'm like, well, you didn't answer my question, but okay then. And so I went and I was going to sign up, and it was expensive. It was 10,000 krona, that's 1,000 euros, 800 pounds, for just a workshop. And it was more than I had spent, and it was a lot of money for me at the time. But I went to the back, and I was standing there, and I was going to sign the contract, and my hand was literally shaking. And then I thought, Well, right now, my plan is to wait until retirement. This can't be worse. So I decided to sign. I signed up. I kind of, without knowing it, followed Tony's creed of, make a decision then and there. And I signed up. And then me and my wife, we went home to pick up William from my parents, our oldest son. And, they asked, how was your seminar? And we got, we're so excited. We signed up for this workshop. And my parents instantly, my dad's like, you do realize you've been scammed, don't you? I'm like, no. No. He's like, well, first off, they're British. As if that was the worst thing in the world, right? They're British, right? Yes, okay, Dad. And at the same time, my mom's there like, oh my God. I'm like, oh, you paid by credit card, didn't you? And I'm going like, yeah. I said, that's great. We can call the credit card company and stop the payment. The money is saved. Yay. And I'm getting really nervous. This is the first feedback we get on our decision. And I'm getting really nervous about this decision. But finally I said, no, you know what? No. I made a decision. And, when I put my name to something, when I say I'm going to do it, I do it, okay? So I said, no, I'm doing this. Give me my son. We're leaving. and we left. And, a few weeks later, it was time for the workshop. And so we go, and we were nervous. So we got there really, really early. One of the first people there, and I kind of went to the hotel reception. I'm like, yeah, there's supposed to be some Brits here. They're supposed to be teaching property investing. And like, yes, of course, they're upstairs. They're fine, just sit outside. I'm like, oh, okay. So it was for real. I wasn't scammed, yay. And it was 3 amazing days. We learned so much. We learned how to analyze different property markets. So we analyzed, the Swedish market, and we compared it to the UK market, and we understood what he'd been talking about. Like, wow, what an opportunity. We analyzed other markets in Europe. We then analyzed deals, so we learned how to do the due diligence. We spent hours learning the due diligence, which is such a key part, and then we learned to calculate deals. So we really got all the tools we needed to start. And then they talked about the importance of having a mentor. And they defined a mentor as someone who's done the journey you want to do, that has had challenges on the way, and has overcome them. And so we knew, okay, so now we've learned how to analyze markets. We know we want to do the UK. We've learned how to analyze deals. So we know how to kind of see the future of the deal. We've learned how to find the deals and how to calculate them. We've learned what we need to know. We can find a deal now. We can do the numbers. We can do the due diligence. And then, we can do the deal. We know what we need to know to be able to be successful. Maybe we should get a mentor, because we didn't have a mentor when we started in stock. So maybe that's the difference. And when I went up to him again, I said, wow, this was amazing. I get what you mean. It works. And I want to do this. And they had students that had shared, their journey, just as, we have on our YouTube channel, dozens and dozens of students sharing their journey, that it works, that you can do this, that it is possible, that it's not too good to be true. And I was really, really excited. I said, would you become my mentor? And he looked at me and he said, no. What? Well, why don't you want to be my mentor? He said, well, Daniel, look, I'm British. And you're in another country. You want to invest, yes, in the UK just like me, but you're investing in another country from where you live. And that's not the same journey. Because remember, I said a mentor is someone who's made the same journey as you, that has had challenges on the way and has overcome them. And this is not the same journey, so I cannot become your mentor. And I got really stressed. I'm like, no, but I need you as my mentor. I need to do this because I need this support. And I wasn't going to give up, and I negotiated. And finally he relented. He said, okay, I'll be your mentor on one condition. I can show you everything about how the UK works, but all these things with you being an international, international tax laws, company setups, currency, project management, all those things, you got to figure that out. How hard can it be? We got this. Like I said, I was naive there when I started, and as you know, all that went wrong, and I'll get a little into that in a bit, and that's where that crash came from. But we started out well, and we went over with him, and what he'd done was he'd created a 3-day mentorship. So we spent 3 days with him. He charged us 185,000 krona, so about 18,500 euros. So he got a good day rate, right? But we decided to do it, and we flew over, and we sat with him for 3 days. We set up our company. We got all the base contacts, and like I said, our journey started out really well. So he introduced us to a sourcing agent up in Scotland, and that actually turned into our first deal. And I'm actually going to let you calculate on this deal we're going to do this together. So what happened was we went up to Scotland and we met this woman who, she was a sourcing agent. She'd found this little flat, about 20 square meters, and she'd had a viewing, she'd had a builder there, she had the build quote, so everything was ready, and this turned into our first little deal. So what I'm going to do is I'm going to bring up a PowerPoint here, and then you're going to get to go through this step by step, the calculation, and look at our first deal. So please, editor, bring up our PowerPoint. All right, so we're going to do a calculation here together on the first property deal we ever made. We had just been working with our mentor, and he had introduced us to a sourcing agent up in Scotland. So after our mentorship, we went up to Scotland to meet up with her, and she had found a gorgeous little flat in Glasgow on a street called Gallowgate. So Gallowgate was a small studio flat, only like 25 square meters. It needed a lot of work, but here you can see the outside of the building. And she'd already had a builder come by. She negotiated the price, so everything was ready. We had the home report, so we had the survey. We could go through all the information. So we sat down together and we went through it. So first, when you do the calculations, what you need to know is how to calculate your cash flow. So that's what we're going to do first. So you got your cash flow is your rent minus your costs, and your ROI is, well, your return. So your ROI is your annual cash flow divided by your invested capital. So we'll do this a couple times. But so she had found us this little buy-to-let flat. We could purchase it for only £13,000. It needed £11,000 of refurb, and we had other costs of about £1,500. Obviously, in Freedom Property Intensive, we'll go through exactly what those costs would be. So our total cost would be £13,000 plus £11,000 plus £1,500. So a total of £25,500. And that doesn't sound like a lot. And in property, it isn't. But it was a small flat in Glasgow, and we knew it was going to have a rent of £350. And what's great is this flat has been ticking like clockwork since we bought it. It's got a stable rent of £350 a month. We've never had any voids. We've had tenants move out, but we've always had new tenants move in right away because we've been marketing it when as the tenant has been in their period before they moved out. So it's been a fantastic property. We pay 10% to our management agent, our letting agent who runs this for us, and we put away 10% for monthly operating expenses. So ongoing refurb, council tax is covered by the tenant, but insurance and things like that. So if we do the numbers now, cash flow, remember that's rent, and then you subtract your costs. So our rent is £350 minus our letting fee, which is 10%. Yes, 35, minus our monthly operating expenses, 10%, and our cash flow is £280 a month. Now that might not sound like a lot, but imagine we had spent 10,000 krona going to our first workshop, so £1,000 for our workshop. We had then signed up for a mentorship and paid £15,000, and then we'd spent another £25,500 on the property. So we were up over £40,000 in expenses, and when this cash flow hit our account, that just told us it works. We're making money. Yes, we've spent £40,000, we got £280 back, but we knew we would now have £280 every month for the rest of our lives. That is an amazing experience to feel. So let's see how good the deal is. Return on investment is what we use to compare different deals to each other. So let's take a look. We had £280 per month coming in, 12 months of the year. So every year we're making £3,360. Divide that by what we invested, and we have a 13% return, which is actually really, really good compared to the stock market where the average is 10%. And we got 13, and actually you haven't even brought in here that we also have capital increase in value. So this property is ticking a stable cash flow of 13% per annum. That is really, really good. What you might have noticed is we didn't take a mortgage on this property, and that's okay. We didn't take a mortgage. It was a very small property. If we had, we could have gotten the returns even higher because we would have had to invest less. But in this case, we didn't because it was such a small property, and this is how it went. So it's a very cool deal. And so back to the presentation. All right, so that was our first deal. So we were really excited. We had cash flow. Because, remember, we'd spent all this money, we'd done the first weekend course for, 800 or 1,000 euros. We then spent, another 18,500 on the mentorship, and then another 25,000 euro or pounds, so that's 30,000 euros on doing the deal. So we're up to like 50,000 euros, and then we got some money back. we made some income. And yes, it's just a couple £100, but it's there, it's real, this works. And we got really excited, and we did deal number 2, we did deal number 3, we did deal number 4, and finally we did deal number 5. I want you to calculate deal number 5. Are you ready? So you're gonna get to do this by yourself. So what I'm gonna do is I'm gonna bring up a PowerPoint again. We're gonna go through my 5th deal together. But what I would like you to do is pause this video and do the numbers yourself, and then start the video, and then, see if you got it right. Just as a practice, just as a test. You don't have to if you don't want to, but it's fun, and it becomes an extra little learning experience. So we're gonna bring up the PowerPoint, I'll show you the numbers, and then you do it yourself. So are you ready? All right, bring up the PowerPoint. Okay, so let's start looking at this next property deal. So this was a property we bought in Liverpool. This was the 5th deal we ever did. It is on a road called Fazakerley Road, near one of the large hospitals in Liverpool. And what we realized was, as you can see, this is a terraced house. We saw we could redo the floor plan, get more rooms, and instead of renting this out to a family, we could rent it out to doctors and nurses. Each one would then pay, obviously, a less of a rent than a family would for the whole. But because we could make this into 5 rooms, we would get a much higher total rent and a higher ROI as a result. So we decided to make that decision. It has worked very well, and we still own this property, and it still gives us cash flow. So we've been very, very pleased with this deal. Well, let's go through the numbers and see what you think about it. So remember how to do the calculations. Our cash flow is our rent, and subtract our costs. And the ROI is our annual cash flow invested divided by our invested capital. And when I say invested capital, I mean our own capital we've put in the deal. So if we have a mortgage, that would be subtracted from the invested capital. So let's go through the basic numbers and then pause this video so you can do the math yourself and see what you get. So I'm going to give you the overview, and then you do the numbers yourself. So this is, as I said, an HMO. We bought the property for £71,000. We refurbed it for $31,000. So if you compare this to Gallowgate, you realize that it's a lot more expensive. It's a bigger house, it's a bigger building, but also we made it into an HMO, and that does require more work. You do, you fireproof the property. You do work in the floor plan. You have to furnish the property. So there's a lot more things to think about in an HMO than you have to in a buy-to-let. So we're coming out with a separate video on HMOs, so make sure to subscribe to our channel to get that information when that video comes out. That will go through more in depth what you need to think about when doing an HMO deal. We had other costs of £4,000. Obviously in Freedom Property Intensive, we go through each one of these costs so you know what they are. For the ease of this video, I've just gathered it up into one easy number. It was £4,000 for survey, legals, sourcing fee, and all that. So now you could pause the video, do the math, see what this total is. The total cost is then $71,000 plus $31,000 plus 4, so $106. We knew we were going to get a rent of £1,300 because we'd done our due diligence. That's what's so key in a property deal, is doing your due diligence before you buy the property. So going into the deal, we knew we were going to earn £1,300. And obviously in Freedom Property Intensive, we teach you how to do this. Letting fees on HMOs are usually 15%. Sometimes you get them a little lower, but 15% is kind of industry standard. The monthly operating expenses, industry standard again, is 15%. As you remember from Gallowgate, it was 10-10, but industry standard is 15 on HMOs. It's a little more operating expenses. You pay the bills, the council tax, and there's just more maintenance and turnover in an HMO. I want to tell you, I actually put away more in my HMOs than 15% because I'm kind of conservative, but this is industry standard, so we'll use those numbers for this video. But just remember, we put away more. So if you want to be a little conservative as us, then do that. Now, in actuality on this deal, we did take out a mortgage, but because this is going to be the deal you do yourself, I want you to just pretend we didn't take a mortgage and calculate it without a mortgage. Obviously, with the mortgage, the ROI becomes much higher. We're just going to do this so you can practice and doing the math. In Freedom Property Intensive, obviously, again, we do the full math, full numbers, with mortgages, without mortgages, go through each cost. But now let's just practice the numbers, make sure it feels comfortable and you get it. So pause the video
and run your numbers, calculate the cash flow and your ROI. All right, great. I'm betting that you paused this video, so I'm going to keep going. But if you didn't, pause it now. Do the math, because the more you practice yourself, the better you get. Well, let's do it together now. So our cash flow is £1,300. That's our rent in, minus our letting fee of £195. So 15% of 1,300 is £195. Our monthly operating expenses, also 15%, so also $195. Again, we had a mortgage, so that would be subtracted as well, but we're not calculating with that now. So pre-mortgage, our rent is £910 per month. The ROI then, annual cash flow, so 910 times 12. I know you're not supposed to do equals and equals, but I did this easy for myself. I hope you can forgive me. 910 times 12, so total annual cash flow of £10,920 divided by our invested capital of $106,000 gives me a 10.3% return. That is still higher than the stock market, and I can tell you when you take a mortgage, this ROI goes through the roof. So this actually becomes a really good deal. So well done, you did the math, continue to learn, and let's get back to the video.
All right, great. So you saw the first two deals we did, and we had so much momentum at that point that we just felt like, we were going to the moon. But you remember, it wasn't all sunshine and smiles. Things started to go wrong, and it really came down to the project management. We had a huge loss in currency when the Brexit vote went through, and a lot of things that went wrong. And what we learned was that you need a mentor to show you. And since our mentor, he showed us the UK side, and we understood the deal side, but we needed help with all the others. And what we did was we went out and we got mentors in all these different areas. And we had currency specialists, we had solicitors, project management experts, of course Kim Kiyosaki, Randy, and Tony, all these people who could help us and support us. So Tony's organization was amazing, thanks to Success Resources to give us that support. And we had that help, and thanks to that help we could then put together that. And that's really where these courses come from, is because we've been able to work with all these different people. We can now help you as an international invest, because we can help you with the currency. We can help you with the international tax laws. Not that I know the tax laws for every country, but I know who to call. I think it was Henry Ford who was being interviewed, and they were attacking him for being for just being a high school dropout. And they were asking all these tough questions, and finally he shouted, he said, "Look, I don't know the answer to all your questions, but you see these phones here? These phones on my desk, if I lift one of them, I can call the smartest people in any industry and I can answer any question you want. I don't have to know it. I have to know who to ask." And that's really what it is about. It's now knowing how to put together a team, and I can show you how to do that. And so I promised that I would tell you more about our course, and I have a big surprise for you here at the end. So what I'm going to do is I'm going to tell you a little about the course. I have a great deal for you on it, and then I'm going to tell you the big surprise, and you're going to love the surprise, I promise. So the course is called Freedom Property Intensive, and in it we'll show you exactly what you need to do in order to go from wherever you are today to reaching your goals and start building your passive income in your property portfolio. In Freedom Property Intensive, we'll go through how to analyze markets, how to find deals, how to analyze those deals, how to calculate them. We do calculations on lots of different deals. We literally spend 2 hours showing you how to do your due diligence and just making sure you have everything in place that you need in order to build your dream life. Sound exciting? It is a course that has come from so much work. Literally we spoke to hundreds of different investors from all over Europe and asked them about their journey and, the challenges they'd had and, what had been good and what had been bad about their journey, about the education they had received, and asked that question, kind of the million-dollar question, like, what do you wish you had learned? And that's what we've tried to kind of summarize in Freedom Property Intensive. Take what all these people wished they'd have learned before they'd gotten started so that you can have that when you get going. Sound pretty amazing? I hope so, because it is a truly valuable course, and we've had so many students have huge success in going through Freedom Property Intensive, which you'll see when you join the course, because you'll be getting access to our community. But let me show you everything you're going to get. So first off, do you remember what I paid when I joined or when I went to my first workshop? Yeah, exactly, €1,000. Do you think that was a good deal? Well, I have to say yes. I mean, even though, yes, I had a lot of challenges on the way, it didn't really go according to plan, but I would have never been where I am today if I hadn't spent that €1,000. Do you remember what I paid my mentor? About €18,500. And if I hadn't paid him that, I would not be where I am today. Actually, I wish he'd charged me more and actually supported me a little longer after, but you can't get everything, right? But that's what we've tried to take. Like, what do we wish we would have gotten? And to give that to you. So the first thing you're going to get, if you went to our website now, you could order Freedom Property Intensive, and it costs €499. But because you've watched this entire video, like I said, I want to give you an amazing offer as a thank you for putting up with me for so long, and also because we want you to take that step and join us. We want action takers. That's what's been the key for our students. Those who take action, they succeed. And so we want to reward you as an action taker. So if you take action right away, I'm going to give you an amazing deal on this $499 price. So you're not paying $499. You're going to get a much better offer because we want you to have the opportunity to take that step now. Does that make sense? Yeah? And so what we've done is, in addition to getting Freedom Property Intensive, we've created a lot of bonuses that I want to give you as well, just to make sure that you have everything you possibly could need to get from where you are now to your goal. So you ready? Is it all right if I share this with you? All right, awesome. So the first thing we created, and we created this specifically for you who've watched this webinar with us, this introduction course, because we want to give you that extra thing. So the question a lot of people ask when they start is like, I wish I'd gotten a step-by-step checklist. Like, what is all the steps I need to take? What do I need to do to reach my goal? Does that make sense? Yeah. Do you feel maybe that same way? Like, what do I need to do now? So we created the Getting Started checklist. It literally outlines every single step you need to take to go from where you are now to reaching your goal and buying your first property. Sound pretty cool? So we're including that for you. Normally that has a value of €250. So it's a €250, so we're including that. So we're going to give you a discount on the $499 for Freedom Property Intensive, plus we're getting you the Getting Started checklist, which is worth $250. So you're getting both of those. Now, a lot of people come to me and they ask, like, Daniel, how much money do I need to get started? And that's a great question. And I'll get back to that in a moment. But another question a lot of people ask me is, how much do I need to become financially free? How much do I need to invest? Well, that is a very unique question. To you, everyone will have a different situation, different goals, how much money you need. So it will depend very, very much. But because I know you're not happy with that answer, right? You want to know, how much do I need to invest? We've created the Freedom Figure Calculator, where you can plug in exactly how much you need to be financially free, how much you need to be to live your dream life. It will give you the exact number, the exact dollar amount, euro amount, depending on which currency you choose, the exact amount you need to invest in order to become financially free. So it's an amazing tool that shows you exactly what you need. Normally we sell that tool for €199, but we're including it here today so that you can get started. So in addition to the course, and in addition to the Getting Started checklist, you're going to get the Freedom Figure Calculator, which will show you the whole way through how much you need to invest. Sound cool? Cool. So now to the question, like, what do I do if I don't have the money, right? What if I don't have that much? Well, you remember I mentioned earlier in the video, there are 25 different sources of capital. Yeah, only one of them is your own money. Well, in Freedom Property Intensive, we're now including all 25 sources. So we're going to walk you through each one of these sources for how to fund your deals. It is so valuable. You're going to learn so much from that course that you're going to be able to fund your deals. So now, really, if you think about it, you'll get the knowledge of how to analyze the deals, choose a market, find the deals in Freedom Property Intensive. You'll have the step-by-step checklist in the Getting Started checklist. You know exactly how much money you need to invest to become financially free, and you'll know exactly how to find it because you'll have the 25 sources of capital. Sound pretty good? Normally, the 25 source of capital costs 299 euros, but again, we're including that for you, so don't worry, you don't have to pay for it. You're getting all of this because we want you to succeed. I hope you've noticed that throughout this video. You know, my goal is really for you to reach your goal, and that's for the entire Momentum team. So we've been thinking, we were speaking to all these investors, we're going, but what else can we give you? What more can we do for you to succeed? And, you know, we kept getting these like, well, what is the step-by-step checklist? Well, here it is. Well, how much money do you know, I wanted to know when I was starting out how much I needed to invest. And we have students and people coming to us reaching out, like, how much do I need to invest? Well, great, the Freedom Figure Calculator. So how do I find that money if I don't have it? Well, there are 25 ways. Only one of them is your own capital. So if you don't have the money, there are 24 others. So we'll show you that. If you have the money, that's great. Then it's very, very easy. If you don't, there are 24 other ways of sponsoring the deal so you can live your dream life. What if you don't know exactly what your dream life is? Remember how important goal setting is? You know, the Harvard Business Review study I shared a little earlier, with the one that Brian Tracy showed me? Well, that is a super, super key to proper goal setting. Virginia Tech actually made a study where they showed that people who set goals and review them continuously earn on average over their lifetime 9 times as much as those who don't set goals. Which is incredible. And imagine what that can do for all areas of your life. We focus so much on goal setting, and we've worked with some amazing people. As you know, Kim Kiyosaki, Tony Robbins, Randy Zuckerberg, and all these other people that have supported us. And one of the things we worked on a lot was goal setting and how to do that properly. So we've set up Goal Setting Mastery for you, which will show you exactly how to set goals so that you feel that you have that pull as well, not just the push from the course and the support and information, but also that pull that you're moving towards your goals. We charge 399 euros for Goal Setting Mastery. It's a course outside of kind of just the property realm that shows you exactly how to set goals. But we're including this now so that you have the tools you need to succeed. This is almost becoming ridiculous, right? But it really is. We want you to succeed. So you're going to get, you're getting the entire Freedom Property Intensive. You're getting the Getting Started checklist. You're getting the, the Freedom Figure Calculator, the 25 source of capital, and Goal Setting Mastery. And once you join Freedom Property Intensive, so all you have to do, whenever you want, click the button below. If you click that, you can sign up, and I have a surprise for you. You can sign up, register, and you're in, and you're going to get all of this. And you're going to get invited to our investor community. And now, why is that so important? Well, being an investor can be really lonely, right? It can be hard. And you'll probably have setbacks, just like we did. But how do you overcome them? The right people around you. So we've gathered the best investors from all over the world in our Facebook community. You're going to get an invitation to that community, which is so, so powerful. Every week we do a live Q&A, so you can ask any question you have on your journey, and we're there live and we answer those questions. Every week we have a great dialogue, a great discussion, and so many questions from people all over the world, and everyone is supporting each other. You're now going to be a part of that community. Get that support. You're going to be able to find business partners, investors, deals, power team members. Everything you need is in that community in addition to this course. So it is just so, so powerful. I can't even put a price on it, so I'm just calling it priceless here for the sake of it, because I can't put a value on those kind of contacts. It's just so powerful. So really, this is what you're going to get. You're going to get all of this because we want you to join. I have one more surprise though. Before we wrap up, I have one more big surprise, and that is the book Think and Grow Rich. We're actually including the book Think and Grow Rich, that life-changing book, the one where that Napoleon Hill wrote about, where he interviewed Thomas Edison. Some of the most successful people of all time have been interviewed in Think and Grow Rich, and it's distilled into 13 lessons. What we've done is we've created Think and Grow Rich for property investors. So you're getting the book, the ebook of Think and Grow Rich. So you'll be able to download the book. In addition, we've created a video series where we show you how it is applicable today, in today's market, and for you as a property investor. And what's so super cool, I'm so excited about this. What's super cool is we were actually able to get access to one of Napoleon Hill's personal coaching of of Think and Grow Rich, of the principles. That is included too. So you'll be learning directly from the author. So that is so, so cool. It's hard to put a value on what all the courses in the book and everything. So we put a nominal value of 99 euros, which is probably about what you would have to pay if you bought all these separate parts. So it's really, really cool. And finally, we know that there is nothing can compensate for one-on-one, you know, like the help I got from my mentor. Yes, I paid 18,500 euros for that, but but we want you to have that same experience. So you're going to get, once you're through the course, you'll end with a one-on-one coaching call with one of our certified coaches. Normally that would cost 199 euros. You're going to get that call in order to map out your next steps. So you're getting all of this when you join Freedom Property Intensive. You're getting the Freedom Property Intensive course, which is worth 499. You're getting the the getting started checklist. You're getting the Freedom Figure Calculator. That's hard to say, right? The Freedom Figure Calculator, the 25 source of capital so you can fund your deals, goal setting mastery so you feel confident in setting goals and that you're on the right track. You're getting access to the community with the live Q&As every single week so you have that ongoing support. You're getting Think and Grow Rich with the coaching from Napoleon Hill, with the application video for today, and you're getting a coaching call. So you're getting all this value. I can't even do the math. I'll let the editor bring up the number for you. So that is what it's worth. That's insane. You're getting all this. And like I said, we're giving you an insane deal on the 499, plus all these other bonuses are free on us. That's included on us. It's something we want to give you when you join. So instead of paying, you know, this total value, you're paying 499 euros, you're getting it all for just 197 euros. Pretty cool, right? So click the link below to register now. You just do it, you fill out your credit card details and everything, and you're in. Oh, I almost forgot. I do have a surprise for you to say, yeah, please don't let me forget stuff like that. I have a huge surprise for you. You can sign up now. But what we've done is we want you to experience it before you pay. We want to give you a chance because we know that this is an amazing course. We know you can become a successful property investor from going through this course alone and being a part of this community and having that support. We know this is enough for you to actually succeed and become a successful property investor. We want you to take that step. Obviously, we hope that you'll then in the future might give us a testimonial, tell other people how fantastic we are, and that will obviously help us grow. We want you to become a part of that community because we know it's good and you know how much value you got for these first couple hours together. What we want to do is we're going to let you try this out free of charge. For 7 whole days, free of charge. What's that for a surprise, huh? That's pretty cool, right? So all you have to do is you click the link below, you fill out all your details, you fill out your credit card, but we won't bill you until 7 days. Meaning if you, for any reason, want to cancel, you just send us an email and we'll cancel your subscription. No problem, no questions asked. You're in, you're fine. You get to try it out, you get to experience, and if you like it, you continue. If you don't, we won't even charge you. Sound pretty good? Sound fair? You know, that way you know that it's good, we know it's good, and you'll get that value and can start learning. We also have a 30-day money-back guarantee, which means even after the 7 days, after we charge you, if you want to cancel, you can send an email. Again, no questions asked. Just say, I want to cancel. We'll pay your money back if we've charged you. If we haven't charged you, we just cancel it. So that way you get to experience the course, you get to try it out without being charged. It's only 197 euros, even if we do charge you, and you're getting all of this. You know, you're getting Freedom Property Intensive. You're getting the Getting Started checklist, literally every single step you need to take in order to reach your goals. The Freedom Figure Calculator that gives you that clarity with what you need to succeed. You're getting the 25 source of capital. So yes, make sure you click the link below. Below here, click the link, just sign up now, fill out your details, and you're in. You'll get access right away to the course. You'll get an email which will show you how to log in to the Academy portal, and you'll get access to everything. So you're fine. Once you've gone through the 25 source of capital, we'll show you how to set goals. You got the goal setting. In addition to the goal setting, you have the community. You're invited instantly into the community. You're a part of that community. Q&As every single week. Think and Grow Rich, the amazing book with the coaching from Napoleon Hill himself, and our application video. And of course, the one-on-one coaching call when you're through. When you go through the entire course, you'll get that coaching call, work with one of our certified coaches to map out your next step and reach your goal. So I hope you're excited. Click the link below. We are so excited to have you. Thank you so much for joining me this entire time. I do not know how you put up with me for so long, but thank you so much for joining. Thank you so much for joining Freedom Property Intensive. Click the link below. Try it out. Again, there is really no risk. You're getting an amazing deal, as you know. Instead of paying, €1,000 like I did, or 18,500 euros like I did for my mentorship, you're getting more than I did, and you're paying 197. And you can even try it out for free for 7 days. There really is, and you have the 30-day guarantee. There is no risk. Please take this action. Please take this next step, because you want to change your life. That's why you watch this video. You want to take this next step. And I think we've done everything in our power to make that step as easy as possible for you. So I hope you join. Thank you again so much for joining us here today. You're amazing. Now take this, change your life, become successful, become financially free, and then help other people do the same. Because that's what it's about, right? So click the link below and let's start changing the world together, all right? Are you ready? Are you in? Yes, here we go. Click the link and I'll see you there. Thank you so much again. I'll see you soon.